That the budget has continued with the government's agenda of plugging tax arbitrage options used by the ultra-rich. So it has proposed taxing payouts received from life insurance policies issued after April 2023. This is if the total life insurance premium of all policies combined paid in a year is over 5 lakh rupees. So Yash is really standing by with an explainer on this. Yash, we heard about the announcements that came through, but take us through what the impact could look like. And you've also been talking to some of the bigger companies. So what do they have to say on this?
Well, that's correct, Pavitra. So a budget spelt out not just one but two negatives for the insurance sector and particularly life insurance industry. The first one, as you spoke about, was taxing the income from large ticket life insurance savings products. As far as this tax is concerned, before I explain it, let me just put it out straight that ULIP and term products are excluded from this tax. It's the savings life insurance policies which will come under the ambit. Now, what the government has said is that they will tax the income from savings life insurance policies where the aggregate premium exceeds 5 lakh a year. Essentially, what this means is that if you are buying life insurance policies, multiple or single, and the annual payout of the premium exceeds 5 lakh, that's when the taxation will come in on the policy with which an individual breaches that limit of 5 lakh in a year. This will be explained better with an example. Let's say an individual buys two policies having premiums of 4 lakh and 2 lakh. In that situation, because he's breached the limit of 5 lakh with the 2 lakh policy, the second policy, what will be taxed will be the 2 lakh savings life insurance policy. Let's look at other example. If an individual buys three policies having premiums of 2 lakh, 2 lakh and the third one with 1 lakh, in that situation, he will be completely tax free because he's still under the limit of 5 lakh, 2 lakh, 2 lakh, 1 lakh. Since he's still under the limit, there won't be any tax in this situation. We've been speaking to a lot of industry players and what they tell us is that the taxation will stop misuse of life insurance products by the rich as a tax-free savings instrument. Also, the Q4 numbers and in fact the March numbers will be very strong for life insurance companies because all these large ticket buys will happen as far as the policies are concerned, and that number could look strong. The second negative came from the new tax regime that has been sweetened, which sort of discourages buying of life insurance policies to take exemptions under the new tax regime.
Okay, all right, got that. And that's much needed clarity, Yash, so thank you for it. I think there was a lot of confusion yesterday in the afternoon, at least, around how this is going to work. In fact, Revenue Secretary Sanjay Malhotra made a crucial clarification regarding this matter as he was in conversation with Shireen. Take a look.
Is the 5 lakh rupee threshold for premium paid in 1 year or over the term of the policy? That's question number one.
Yeah, so it's 1 year. So every year, you can contribute 5 lakh rupees towards one or more than one policy. And this is in addition to the 2.5 lakh rupees limit that you already have in ULIP. So overall, insurance basket, you can buy policies worth 7.5 lakh rupees year on every year you can pay that premium. So it's not over the life term. This limit is not over the life term of a policy, but this is an annual limit.
It's an annual limit. And, again on this aggregation aspect, is the threshold per policy or aggregate of all policies?
Aggregate of all policies.
Aggregate of all
together
policies.
For a year. For a year, but not over the term of the policy.
Okay, so aggregate of all policies for a year, not over the term of the policy. And will only proceeds from premium above 5 lakh rupees be taxed proportionately, or if a person crosses the threshold, 100% of the proceeds will be taxed?
That's right. I mean, if it crosses 5 lakh rupees, then that particular policy gets taxed.
Okay.
So he can always choose, to divide his policy and keep the premium, the 5 lakh premium, the policies with premium up to 5 lakh separate. If he wants to buy, still wants to buy a policy more than 5 lakh, that 1 lakh rupee policy can be different. So that way, he can avoid taxation on premiums, policies with premiums up to 5 lakh rupees.
Okay, that's an important clarification. Let's now find out what brokerages have to say. Surbhi standing by what insurers and brokerages are saying about the development. Surbhi.
Hi, thanks for that. So insurance sector is impacted by the recent changes proposed in the budget yesterday. To give you some perspective, the non-par segment, which is going to be impacted, contributed 35 to 70% of the APE and VNB growth in the past 3 to 4 years. Now, a couple of managements have come out and put out a statement. ICICI Pru says that the non-unit linked policies with a yearly premium of over 5 lakhs is just 6% of their total APE for the 9-month period. And Max Fin has said that it is 9% of their individual APE for the 9-month period. Now, brokerages also have a view on this. Macquarie says that the HDFC Life APE will have a 10% impact. SBI Life APE will have a less than 1% impact. SBI Life and ICICI Pru Life look attractive to them at the current levels. Jeffrey says that the impact is higher for HDFC Life and Max Life, followed by SBI Life and ICICI Pru. Morgan Stanley also sees meaningful downside risks to FY24 APE and VNB growth forecasts. And CLSA has downgraded HDFC Life to a sell call from a buy rating, Max Financials to an underperform from buy, and SBI Life and ICICI Pru to an outperform rating from a buy rating.
All right, Surabhi, thanks a lot for taking us through that entire roundup of what brokerages are saying on the